The other one that's tonight, too, is AMD, right? Not to be forgotten about, because it's important. Josh, I'm going to get your take on it in a second because you have recent ownership in it. I know you don't have it anymore, but Kristina Partsinevelos is sitting at the desk with us today here at Post 9 because you cover this. And, how should we think about this in an environment where it's so dramatically underperformed some of these other bigger names?
Yeah, especially the stock in just the last month. There's been a pullback of almost 15%. I think the concern with AMD is that you still have part of its business that is cyclical in nature. It is exposed to PCs, 20% of revenue. It is exposed to to more traditional servers. And we know from Intel, TSMC, a list of others, ASML, they've all talked about weakness in the first Q1 and Q2 and then improvement in the second half. So that is not necessarily good news for AMD, which is why we're going to be looking for any type of trends on those two categories. But on the flip side, all of this talk about CapEx spend, the AI chip, their MI300, more specifically the MI300X, they had previously said the full year 2024 estimate was going to be $3.5 billion. I say this because that number is extremely important. If they increase that estimate to about $5 billion, which is what the street is anticipating, then you'll see shares react very positively. Buy side even has that number as high as $8 billion. So that's the commentary that we're going to be looking for specifically with this MI300 series AI chip that is going to be the competitor to NVIDIA's H100, H200.
What's the easiest answer for why the stock has underperformed these other names so dramatically? Well, whether it's a Broadcom, which is up 20% year to date, right? AMD's only up 9%. Okay, let's just put that on the table. NVIDIA, for example, top of the heap, up 76%. Why is it? You're
describing AI plays versus those that are not necessarily solely AI plays. More than 50% of AMD's business comes from embedded, gaming, PCs, and those don't necessarily benefit from this big AI boom.
Yeah, but they've made it pretty clear that they're coming, right?
That the improvement's coming in those segments is what you're asking.
Yeah, on AI.
In the second half.
Well, so some of these other companies are getting the benefit of the doubt.
But Broadcom and Marvell are specifically for custom AI chips, and so they're actually benefiting in the near term. Broadcom, for example, has the collaboration with Google, so there's that difference, which is why they're seeing a bigger upside right now versus AMD that is still exposed to the cyclical nature of the chip space.
All right, they need to talk about AI like 3,000 times on the call.
I wonder, there's AI fatigue to a certain point now, where some investors we're not seeing the actual monetization. I know this goes into greater tech as a whole, but there's only so much you can say AI and say that it's going to bring in revenues, and then it doesn't.
You still, Steph, prefer the Broadcoms and the Lambs to the AMDs?
Yeah, I mean, actually, I trimmed both a couple of weeks ago. I would buy Lam Research right back. After the quarter last week, it was very good. They raised wafer fab equipment spend again. This is the third quarter in a row. Gross margins are structurally higher than prior cycles, so they're much more profitable. And actually, I think that they do have an AI component to it. We've talked about memory needing 6 times, AI being memory 6 times. You need 6 times as much memory for AI. So, and this is a memory player. So to me, this is one I want to own. It's not down enough, but if we get a couple of days like today, because it's not so pretty, I might buy it back.
Josh, you sold AMD, as I mentioned, a few months back.
Yeah, to answer your question, my opinion is, why does it look like this? By the way, right in the middle of the pack, if you rank it versus the other semis, it's up about 9% year to date, but it's the 12th best performer out of 26 names in the SMH ETF. So it's not bad, it's just not great. But to answer your question as to why, I think the bar is too high. Expectations have gone up a lot. I think they can deliver, but it's not enough to deliver. You have to deliver and shock people to the upside. That's like the environment that we're in. The stock's trading 300 times earnings, 44 times forward, fine, cheaper, LOL. Analysts are looking for $2.3 billion in data center revenue for this quarter. To put that into context, they did $1.3 billion last year. So analysts are looking for $1 billion in incremental spend in that category year over year. I think they can do it, but is that going to be enough? So 20 cents in earnings, up from a loss of 9 cents last year. Again, the bar is super high here. So that's why I think it looks the way it does. Technically, the stock is in no man's land. I get interested in it if it falls after earnings. I agree with Stephanie. I love the name. I just don't want to pay for it where it is. And I don't like the sloppiness of the chart.
Ben won. I'll give you the last word, Kristina. I mean, this has been a darling over the last couple of years. clearly until the AI story sort of took over everything. And now you find out the winners from the losers, at least in the near term, apparently.
Yeah, and
not as a loser, but you know what I mean.
Yeah,
the winners from the just astronomical.
So the first mover
winners.
advantage of NVIDIA, of the likes of those custom chip makers you mentioned, Marvell, Broadcom, even the memory makers too, because they benefit from the high bandwidth memory that is needed in a lot of these AI chips. Specifically, AMD doesn't produce that. So even Samsung's results earlier this morning prove that. And so these are benefits for Micron, et cetera, SK Hynix, not necessarily AMD at the moment, unless they blow it out of the water right now at their data center forecast for the MI300.
All right, thanks for the setup. Appreciate it. Kristina Partsinevelos.